Quick introduction, if you don't know me already, my name is Ehsan Reza. This is Fatima Riley, she's a mortgage expert. And the whole purpose of today's session is going to be to educate you guys on what's happening in the market today. We'll talk about, obviously, the mortgage rates, what's happening with that, as I'm sure you guys have a lot of questions. But we really appreciate you guys coming out. It's a Saturday morning. I know it's tough with families and children if you have, so appreciate that. So you won't waste too much of your time. If you know how I work, it's going to be very informal and casual. So no PowerPoint presentation, as you can see. Your checkbooks are safe today. I'm not going to sell you anything, not today at least. But inshallah, we'll get the show going. And I just want to ask Fatima a few questions, interview style, where we're going to talk about current events, what's going on, and also talk about the market in general. We've got a few professionals in the crowd as well, lawyers, accountants, and we'll introduce those guys later on as well if you want to work with them. But just want to talk about the core issues right now. And Fatima, if you want to just give a brief introduction about yourself.
Yes.
And how long you've been in the business for.
Oh, yes.
Yeah.
My name is Fatima. I have been in the industry for 4 years, but I've been an agent for 2 years. It's been a great ride. I mean, when I started out, interest rates were at all-time low and we were having the best time, okay? Fast forward to 2022, here we are, and the phone calls that I've been making, this past week, they've been tough conversations, just because of the interest rate hikes and stuff like that. So that's just a little bit about myself. I have 2 kids. I guess we can get a little bit personal if that's okay.
Yeah, it's totally informal.
I have 2 kids. I have a 6-year-old daughter and a 3-year-old son. They keep me very, very busy. So that's that.
So as you guys all have heard about the interest rates this year and what's going on, I think before we get into what just happened a couple of days ago, Fatima, if you can explain kind of the context for this entire year.
Of course.
Like where were we at the beginning of the year and where are we now when it comes to interest rates?
Yeah, for sure. So I think context is key over here. I think the first thing that we should talk about is that there's 2 types of rates. So other than variable and fixed, there's the Bank of Canada overnight lending rate, and then there's the prime rate, that the banks have, right? So for the purpose of our conversation today, we're probably going to be talking about the prime rate, okay? So I'm actually going to go back to 2020. In 2020, in January, the mortgage prime rate was at 3.95%, okay? COVID happened, March 2020. The bank is like, oh my goodness, we got to think about, the economy, we got to keep it afloat. They dropped the overnight lending rate to 0.25. All the banks dropped their rates to 2.45, okay? So we were seeing variable rates at like 0.99 and fixed rates at 1.23, right? It was like money was cheap. You could refinance and you would be laughing, you know what I mean? But then fast forward to now in March 2022, the first hike happened and then there have been 4 more, right? And we're now at, a mortgage prime rate of 5.45 for most of the major institutions, except for TD. TD likes to do things differently. They're at 5.6, but everywhere else, most of the major financial institutions are at 5.45.
Okay, perfect. And then we just heard the announcement a couple of days ago with the latest rate hike. So what was that exactly, and how is that impacting a lot of these guys in the room? Even if, let's say, you don't have a house right now, or if you're a homeowner or just thinking about buying,
of course.
How is that going to impact a lot of us?
For sure. So on September 7th, right when school opened, I was so happy. I was like, yes, kids are in school. I can finally relax. And then September 7th happened, and I'm like, oh man, there's a rate. I have to call people now. But anyways, there was an increase of 0.75 or 75 basis points. And what that means is that what they're trying to do, I guess, is our inflation right now is at 7.5% to 8%. Typically, we want to be anywhere around 2 to 3%, right? So that's why they're increasing the interest rates. And so for people who have a fixed rate mortgage, congratulations, you're not impacted. But if your renewal is coming up, it's definitely, it'd be good that, you seek out expert opinion, expert advice as to, which road you kind of want to go on to. Then there's people who are in a true variable mortgage, which is an adjustable variable mortgage. Every spike that happens, your payments are directly impacted, okay? And every, and if there's a downward interest rate, then your once again, payments are impacted. Then there's something called a static variable mortgage, which a lot of people love, right? Because your monthly payments stay the same. However, the interest and principal adjusts in the back where your amortization is. So typical amortization is anywhere between 25 to 30 years. When you have a static variable mortgage, your amortization, changes on the bank side, right? But your monthly payments still remain the same, okay? However, this hasn't happened in decades, and now we're hearing about something called trigger rate or trigger point. You hear that word, it's a buzzword, you've probably heard it in the news. That's when you're no longer paying off your principal. All your monthly payments are going directly into your interest, and banks are not happy about that because you're probably never going to pay off your mortgage, right? So people are reaching their trigger rate, right? And banks are calling them. So if anyone's probably reached their trigger rate, your banks are going to call you, and they're going to offer you three things. They're going to say, one, bring your payments up to where your amortization is back to like the level it was supposed to be at. Two, make a lump sum payment. Or three, switch into a fixed rate, okay? To find out your trigger rate, the best way to do it, there's a lawyer, he probably knows over here. It's actually in the documents that your lawyer sends you, and you can find out your trigger rate. We can do a quick calculation to tell you how far off you are or where you are in terms of, if you wanna think about, hey, do I want to increase my payments a little bit to bring my amortization to level before the bank contacts me? So just thinking about that, if you are in a static rate variable mortgage, is very important. In Canada, we have something called a stress test, and the stress test is 5.25% or the contract rate plus 2. Now our contract rates are all above 5.25. So before, people used to qualify at the 5.25 rate. Now people are qualifying at 7.25 rate. So if you were pre-approved, pre-qualified, let's say a few months ago, your qualification probably has changed, right? And so, going back to the bank and talking about, what it is that you can, put in an offer for is important as well. So I think those are the impacts, based on the new interest hike that has happened. I think they said that, at the beginning of it, when they decided to, talk about the interest rates, they had said, September is most likely going to be the last announcement, and then they were just going to, make people, calm down. But if you heard the announcement on September 7th, they actually said that there's probably going to be another rate hike that's going to happen, most likely. We don't know what it is yet or what our speculations are, but that's just something, to have at the back of your mind.
Any predictions?
0.25 to 0.5, I'm going to say.
Okay. Yeah. So you talked about two things, the stress test and also the trigger rate. Mm-hmm. So when the last rate happened, I called, a lot of you guys I called as well, my clients to let them know that, if you're on a variable static, right, where your payments don't change, call your bank or call someone like yourself to find out what the trigger rate is. Surprisingly, a lot of people had no idea that there was even such a thing as a trigger point. So I think one thing that you guys should take out, especially the younger guys that are thinking of getting in the market, understand the mortgage, what you're getting yourself into. Speak to Fatima, who's an expert who can kind of give you like a roadmap, because people get into these deals and they sign paperwork and they really don't have an idea as to what they're getting. So people like Nabil, Fatima can guide you on that sense. So really understand. I spoke to guys that were like, believe it or not, in their 40s, and I'm like, your trigger rate might be coming up. They're like, oh, what's the trigger rate, right? And not their fault, not their fault at all. But the key is to educate yourself and basically understand what's happening in the market now with the rates, so you can make a better decision. And so you can also budget, because now with the interest rates going up, I find that all of us are going to have to sort of adjust the way we spend our money, right? Because, and I'll ask Fatima to illustrate the expenses that have gone up, but maybe, I don't know, you eat out less, right? Some that I'm trying to work on, which is still hard, but or maybe you save a little bit here and there, because there is going to be a pinch, right? I'm not here to sugarcoat things and tell you that things are okay, because they're not okay.
They're not okay.
Me being a realtor in this industry, I have to give you an objective opinion as to where the market is. So there is going to be a pinch if you haven't felt it already, but do your due diligence and adjust your payments, whatever you can, so that the last thing you want to default is on your house, right? We all want to keep our homes. That's the last thing you want to default on. So adjust your payments in other ways so that you can save your house. The stress test, Fatima, in terms of the stress test, because the rates have already gone up so high, like, do you see them removing the stress test?
I don't
Do we even
think
need the
so.
stress test now?
Yeah, right. And,
Yeah.
and we're in the industry and we're thinking, you know, like they need to remove the stress test
Yeah.
or they need to increase the amortization. So now we're at
Yeah.
25 or 30, maybe make it 40 years, right? So people can actually qualify because the stress tests are, you know, making people qualify for like 100,000, you know, let's say, you know, as a mortgage. And how is that possible? Because I'm pretty sure you can attest that you can't really get anything in GTA for that amount, right? So I'm sure, you know, OSFI, which is the governing the body, I'm pretty sure that they're talking about it because they're feeling the, you know, pain point as well, right? I always say this, that the housing market is, you know, one of the biggest markets in Canada, right? Like that's what we live on. So I'm hoping that our government is smart enough to make, you know, calculated decisions where, you know, they actually help, you know, because like I think it was you that had said that there's 400,000 immigrants coming into Canada next year, right?
Next 2 years,
That's a huge number, right? So I'm really hoping they have their stuff together.
No, hopefully. And then, so I was listening to another podcast the other day about interest rate hikes, and they were talking about exactly what you said, that there's going to be a rate hike at least 25 to 50 basis points this year. I think October 26th is the announcement, right? And then is there another announcement in December, or will that be the last of the year?
Who really knows, right? Because back, I think last year, they were like, we're not gonna, you know, increase the interest rates up until summer or the beginning of 2023. They flipped the script and they're like, okay, it's going to be summer of 2022. And then we're in January, I was like, you know, at 10 o'clock, you know, that's when the announcement happens on the day. And I was like, yes, no increase. March hit. And, you know, so anything they put out there, media gets you really badly because especially where you're constantly like reading and things like that, it is very important, you know, to talk to experts, right? Where we're like, because, and I'll give you a personal example for myself, for instance. We have an investment property in Etobicoke. We are negative cash flow on that property. We were positive before all these interest rates and everything happened. My husband's first knee-jerk reaction was like, let's sell the property. And I'm like, whoa, like, and he's in the industry, so like, I'm like, no, stop. Let's not do that. Let's think exactly to Essence point, where can we cut, right? Like, we eat out a lot, Uber Eats, it's on our phone, credit cards on your phone that are safe, like, let's delete them because, you know, you're so lazy to go downstairs or upstairs to go get your credit card kind of thing, right? Things that make you consciously, like, look at your spending and you're like, you know, that's gonna help us. And we know as a family that we need to like buckle, like we need to like really tighten our socks or whatever the saying is, right? Where we need to stop spending on things and, you know, ride this wave out. And to your point that you said, if you have a $500,000 mortgage, let's say, your payments roughly have gone up to about like an increase of $750 from the beginning of March.
This is from the first rate hike?
Yeah, exactly.
Now? Okay.
$750, right? So, and it's probably gonna keep going up. And it's not like this hasn't happened before. Inflation has been very high. The best way to combat inflation, if you see the 1990s, the 2000s, it has been to increase the interest rate. Typical forecast is anywhere between 6 to 9 months when things start to stabilize, right? And if you're in a true variable mortgage, you're probably going to see where your payments are going to be less. You're going to be able to eat out again, you know, shop, whatever it is that you need to do, right? So just...
There's some light at the end of the
tunnel. There is some, you know, light at the end of the tunnel.
So just to follow up on that point, like I don't know how much you can say, but do you see rate cuts coming next summer? Is that... Can you give everybody some hope?
Hold on, is this on television or is anyway, you know?
No prediction, just your opinion.
I mean, we don't have a crystal ball, right? There probably will be, right? Like I'm gonna say like midsummer, like next year, we'll probably start seeing, you know, interest rates coming down.
Okay. Last question, just to wrap up your side of the story, is you mentioned the rates at the beginning. Can you just remind us what the current rates are, variable and mortgage?
Of course, for sure. So it really depends on, you know, whether you do the 25-year or the 30-year amortization, then if you're putting 20% or less than 20% down. But like ballpark, you're looking anywhere between like 5 to 6%, you know, variable or fixed. And, you know, depending on the situation, depending on the lender, but that's where you're looking at in terms of rates right now.
Okay, so the variables are almost as
fixed rate, right?
Any recommendations that you can give?
Okay, personal choice has always been variable for multiple reasons, right? You have access to capital. Like the penalty on a fixed rate mortgage generally is anywhere between like 15 to 20,000, right? On a variable, anywhere between 3 to 5,000. So we don't know, life. We don't know what's going to happen, in 2 years. There's a stat out there, I think, 60% of first-time new home buyers actually break out of their 5-year term before their 5-year term is up. So can you imagine if you have a fixed rate, like what you're paying in terms of a penalty, right? Versus if you have a variable rate mortgage, interest rates go down again. You're like, yes, I have that capital. I'm doing well at work. I can now refinance, do remodeling, buy another investment property, right? Yeah. So think about things like that, short term. But then again, it's based on you and your comfort level. If you need to sleep at night, that fixed term rate makes sense because your payments are same, they're there, they're not going anywhere. If you have a little bit, an appetite for a little bit of risk, I would say variable. So it really depends on. But my preference is always variable.
Yeah, I guess personal situation and your risk factor as well.
Exactly.
Like we have a mortgage on an investment property where it's fixed. And this is like 3 years ago at the time. We were kind of really upset at the mortgage broker because
I wasn't his mortgage broker.
I didn't know her by that time, by the way. So I'm sure my partner can attest to it as well. It's like, why are we going fixed? Well, one reason was because we didn't want to have any inclination to sell the property because we want to hold it long term. But now looking back at it, we're like, it was the best decision we made at the time. But that's the thing with variable, right? Like variable rates were so low, so attractive. And I think even now going forward, I personally would still go variable. I mean, it's not a recommendation or just my opinion, but because I'm okay with that risk appetite, right? And I've seen the benefits of variable. So it depends on your personal situation as well and what you're comfortable with. So that kind of sums up Fatima's portion. We will leave a lot of room for Q&As. It's not going to be a long program. I'm going to give you a brief market outlook as to what we're seeing right now in the market, and then we'll ask you guys to ask us questions going forward. So just based on what I'm seeing right now, or let's take it back a couple of years, when the pandemic started, we saw the market completely freeze. This was back in April and May of 2020, because people were shocked, right? Markets were volatile, the pandemic was here, and no one knew what was going to happen. I personally thought that we were going to have a huge impact on pricing, but then the Bank of Canada decided to lower interest rates to keep asset prices high and to stimulate the economy. Now, along with that, you also had a lot of pent-up demand, and supply was at an all-time low. So low supply, high demand, low interest rates, almost at 0.25 was pretty much a recipe for, I wouldn't say a disaster, but great for sellers and very difficult for buyers. And so we had 10, 20, 30 offers on a single property. This was back as early as February of this year. And it was very difficult to the point where you would put offers in, and Nabil can attest to this, it was like you couldn't do a home inspection. You had to waive your home inspection. You had to waive your financing so that there was a better, it wouldn't even confirm you the deal, it would just give you a shot at getting the deal accepted compared to 10 other offers on the property. And so that was happening. And then inflation happened, and then the Bank of Canada decided to increase its rates slowly and steadily. And they came out with a big rate hike over the span of this year. And so in February, the average sale price was, I would say, for a detached house, was about 1.8 in the GTA, which is ridiculous. And if you look now, the detached home prices are about 1.379. And so from February up until now, across the board, all home segments, we saw a 20% decline in prices. So it's not a crash, but it's a steep correction. To give you some more numbers on the home segments itself, so detached homes from February up until now went down 23% in prices. Semi-detached came down 27%, even more than detached. Townhomes came down 20%. And condos, surprisingly, only 11% drop in prices, right? Because it was still the most affordable segment of all home types. Now, what are we going to see going forward? Just like Fatima, I can't give a prediction because even I don't know what's going to happen. But I can at least give you my opinion based on the trends that I am seeing. The last 4 months, we saw the market decline steadily. I think it was April, May, June, July, with average sales and average price continue to go down. In the month of August, the numbers just came out. We actually saw that turn around. Average sales went up by 15% compared to July, and the average sale price went up by 0.5%. So I wouldn't say that we're turning the corner exactly, but I would say that in the market, we're seeing a little bit of stability right now. But I think when the September numbers come out, and if the September numbers show that the average price hasn't moved much, then I can say more confidently that we are kind of moving into stabilization right now. So it's still very, very volatile right now because of the interest rate hikes. A lot of people are kind of, put their buying options on hold right now, which is why we're literally at a 20-year low when it comes to sales. We were at like 10,000 sales in March. We're sitting at about 5,000, 5,500 right now. This is a steep decline overall. Now, the biggest question I wanted to address, and I'm sure you guys will have, is it a good time to buy, right? Is it a good time to sell? Is it a good time to invest? And there's no one size shoe fits all for this answer, so everybody will have a different answer. But it really depends on your personal situation. And I'll give you some examples that I went through with my clients that maybe you're going through right now. Is it a good time to buy? Let's address that first. It's a good time to buy if you are, let's say, trying to get into the market and have had a difficult time in the last year or 2 years. The reason why I say that is because right now when you go in the market, it's a very soft market, meaning that if you put an offer in, there's a good chance you won't have to compete with anybody, right? I had a call this morning. My dad was on the phone, was in the car with me. The agent calls me. I have a showing after this appointment, after this meeting. And the guy calls me and says, we hope you can make the showing today. Please don't cancel. I said, yeah, we're not going to cancel. And he's like, by the way, my sellers are very, very motivated to sell. So when someone tells you that, it's like, okay, we're going to go in and we're going to really chomp at the bit and see what we can get. So those are the deals that are out right now. I think the reason why someone asked me, is it a good time to buy? They're not asking if it's a good time to buy. They're really asking, can I get a good deal in this market? And are the prices going to go down further, right? So again, as a realtor, I'm going to tell you that because of the rate hikes, most people will say, we've bottomed out. It's a good time to buy. We haven't bottomed out yet, actually. So we probably will see maybe a little bit more of an impact on pricing this year. Are we going to see another 20% decline? My opinion is I don't think we will. I think most of the bloodbath is already over. But can we see maybe another 5%, 7%? It's possible, and it's possible that we don't. But I think if you're in the market trying to get in and you're having a hard time, it's a good time because you can still get a good discount today. You can achieve your goal of home ownership, like you always say. You can do your home inspection, which is massive, right? Think about the guys that had to go in buying a house and they couldn't do a home inspection. You have no idea what's in the home, right? You can do your financing. You have 5 days to do your financing, which is an amazing, amazing incentive in this market. And the best thing I tell my clients now is that when you're in the market, if I'm showing you a home, if anyone's showing you a home, you don't need to rush. You don't need to rush at all. See 15, 20 properties, pick the 5, 7 that you like, and then create a strategy and put an offer in that you like, and look at the price points. In February, it was, you see a house in the morning, you put an offer on the way home. Literally, my laptop was on my lap on the drive home, and I would stop and I'd put the offer in, and by the time it's midnight, it would either get accepted or somebody else would take it. So you have that time right now, which is huge. So we've addressed that point. If you still want to wait for the market to bottom out, by all means you can, but I would recommend is that don't take yourself out of the market, right? People are taking themselves out of the market and they're losing out on the news, the deals that are happening. Keep a pulse on the market. Just keep a pulse, see what's going on. Let the properties come in, maybe go out once a week, twice a week. Keep your pulse on the market because you'll get a call like the agent called me today and say, I want to sell it for 50K or 100K below asking, which is very possible, okay? Next question is it a good time to sell? It's not a good time to sell, actually, right? Because if you're going to sell now, you're probably going to lose 20% of your value. Now, again, it's situational. If you're in a cash crunch and you need to sell, then you should sell. If you're worried that the house values will go down further and you want to pull out your equity, I think my opinion is that that's a really bad idea, just like you saved your husband from doing, is that yes, prices may be impacted further, but if you can weather that storm, I can almost guarantee you that in the next 5 to 10 years, property values will go up again. And it's just a fact. The last decade, property values have doubled. And it's for the sheer fact that in Canada, in Toronto specifically, we have a huge housing crisis, right? And so you have high interest rates, but you also have very low supply, and they're basically, hitting each other, and one of them will win out eventually. I think low supply will eventually win out, which means that there are 400,000 people coming to Canada in the next 2 years. Out of that, the stat is that, don't quote me on this, but what I've read and researched is that 40% come to Ontario. Out of that 40%, a big chunk comes to just the GTA core. So we're going to see a lot more people, a lot more immigrants, a lot more traffic, unfortunately, much worse than what we saw here outside. By the way, I hope you guys found parking easily. I know it was very bad. But we're going to see a lot of that. So in the next 5 to 10 years, I can almost assure you, guarantee you that property values will recover. And when they do recover, at that point, maybe you consider selling or you consider refinancing, taking out equity. So if you need to sell, cash crunch, okay, sell. If you don't need to sell, you can weather the storm, do that and hold on, buy and hold long term. Now, if you're buying and selling, so if you're buying and you're upsizing into a home, I think it's not a bad time. It's actually a good time to sell because the townhomes, as you saw, only went down 20%, detached homes went down 23%. So I have a client right now who is selling their townhome for pretty good value, but on the other side, they're gonna be able to get a nice 4-bedroom, 4-bathroom home in Richmond Hill for maybe 1.4, 1.5, where in February, that house was probably worth about 1.92 million, right? So in that sense, it's a good time if you're upsizing. Is it a good time to invest? It's probably the same answer that I gave you if it's a good time to buy. Keep your pulse on the market. Don't take yourself out of the market. There are deals out there. Don't rush into it, right? Don't panic buy, don't panic sell. There's some good deals out there on the investment side, but you have to take your time, look at your options, speak to your realtor. Even if it's not me, whoever you're working with, speak to that individual and really pick and choose, because now is the time where you can do that. We don't see this market in the GTA quite often, to be honest with you. I've been in the market for about 12 years now. I can honestly say 70% of my time in this market, I've always had to compete with an offer. So this market, I love it because my buyers can go in, we don't have to compete, we can get a good deal, and the buyers are happy at the end of the day. And if the prices come down another 10, 20,000, okay, so what? We were trying to get into the market for the longest time. We got in. Your strategies to get a home for your family. If you're living in a 1-bedroom apartment, which my clients were in, just a few months ago, they were tired of living in a 1-bed. They were tired of renting, right? Like, why should we keep renting? Why are we going to keep waiting for the market to come down? It's come down 20%. Let's go out and look for a deal. And that's exactly what they did. They bought it for $770. They could probably get it for $750 today, but they're okay with that. Because in their mindset, you know what, now they have a home, they're not paying rent on a monthly basis, they're building equity, and that home that was $770 today, which is a beautiful detached home with a 140 feet backyard depth, was probably going for $950 back in February. So in a nutshell, it really depends on your personal situation, but I think overall, do your research, speak to us if you have any questions, and hopefully we can guide you and educate you along the way. Hope you guys are still awake. Yeah. Was that informative? Was that?
I think so, yeah.
Was that good?
Very good.
Yeah. Any questions, guys?
I actually have a question. How is the rental market looking?
That's a good question. The rental market basically has skyrocketed. There's a better word for it, because a lot of people that were thinking of buying are now pausing their buying journey, because like I said, they're kind of on the fence. They want to see where things pan out.
Right.
There's a lot of uncertainty out there, and so there's always been a low supply of rental listings in the GTA, and now you're adding in those 5,000 extra sales that could have happened in the GTA. They're all coming in the rental market, and so rental market prices have gone up just over 20% overall in different pockets, which is massive.
Yeah.
Right? I had a home that I think was a detached home. We were renting it for $3,300 last year. This year, the new tenants paid us $4,300 for it. Wow. We had 7 applications.
Oh my goodness.
I didn't know what to do. I was like, this is a multiple offer now.
The bidding war has shifted to the
bidding war has shifted, yeah. It's shifted completely, right?
Wow.
So that's kind of where the rental market is. But I understand if you're uncertain about the market, you want to wait it out, by all means, I totally respect that. You can lease for a year, But what you can do is maybe 6 months into your lease, you can start looking again, because it takes 3 to 4 months to find a property, close on it. And that window, we don't know how long this window is going to last. It could be 6 months, could be 24 months. I don't know. I'm not here to give you a prediction. All I know is that, never ever take your pulse off the market. There's one thing you guys can come out with today is that just keep an eye on where the market is going.
New pre-construction opportunities.
Yeah.
How does all this affect that?
New pre-construction opportunities?
Are builders incentivizing more?
Yeah, so I'm seeing a lot of condo developers giving you more incentives. One of the biggest incentives I'm seeing right now is that, how pre-construction has a deposit schedule? You have to pay like 20% in the span of 2 or 3 years. And usually the first 15% in a lot of projects you have to pay in 1 year, but in 3 to 4 months in installments. Now what I'm seeing is that some builders are saying, don't give us a 15% or 20%, give us just 5% or 10% in year 1, and the rest give it to us on closing.
Oh, wow.
That's a huge incentive, right?
Yeah.
For people that don't have the 20% or 15% right away, they can gradually give that payment. And then other incentives is, they're giving parking spots, lockers, right to lease during the occupancy period, which allows you to lease a property before closing, right? So we're seeing those incentives. I'm also seeing a lot of builders halt their, their launches right now. For the sole reason because they've seen property values drop, so they know it may not be the right time to launch it. But secondly is that the construction has become so expensive, right? And for that reason, it's just not economic for everyone to start building again, which worries me because now we're putting more strain on supply, right? Which is not what we want. We want them to build. To Fatima's point, like we need government incentives, again, my opinion, that will help increase supply. These rent-to-own programs and subsidies, they're just band-aid solutions that are not really going to, fix the overall issue. The overall issue is that we have a lot of population. We can't stop that, of course. We don't want that to stop because we need labor, we need workers, but we need more housing in the GTA. So yeah, to your question, there are incentives, but a lot of projects have also been halted for the time being.
There may be more opportunities to negotiate now.
Yeah, absolutely, yeah, you're right. Yeah, but before actually you couldn't negotiate with builders at all, right? They were so rigid. Right? I had a story, this is 2 years ago. No, sorry, 2017 when the market was at its all-time high. We walked into a builder's office, I kid you not, the builder did not even look at our faces. He was signing offers and we're like, do you guys have this? He's like, we're sold out. He didn't look at us. And then we just walked out like humiliated. And that's it. It was pretty hilarious. Believe it or not, 6 months later, those same builders called us, said, we're going to give you 4% commission. We're going to give you this and that. And I didn't go back to them because of that reason. But, that's the attitude that a lot of people have, unfortunately. But now you can actually go and negotiate with the builders. They actually tell you, like, we'll negotiate a price with you if you're interested.
I know you've posted in the past, but just kind of want to get your opinion of the current market about kind of a lot of investment properties outside the GTA.
Yeah.
Some of the prices are lower. So what are you kind of seeing in that area?
In the outside of GTA?
Yeah.
Okay, that's a good question. Seeing the same impact on pricing, where we're seeing a lot of places that shot up in value because I think people bought properties in Barrie, Kingston because of the remote working. So we saw those prices go up a lot. Unfortunately, some of those places have taken the bigger hit as well, right? The Toronto core is still okay. I mean, they've taken a hit, but not as bad as like these suburbs. But what I'm seeing is that there's some great opportunities there in markets like Kingston, Barrie, Innisfil, because prices there have come down 20, 30% in some areas. There's still good opportunities. I think there's still good markets, but they'll take time to recover. But they follow the trend of the GTA eventually. So I think that there are opportunities there. We've seen in some areas, like in parts of Bowmanville, if you're familiar with Bowmanville, where I'm going today actually, I've seen some pockets, believe it or not, 34% price decrease for certain homes, which is unbelievable. So that's a good time, like for my clients, this is actually not a bad deal. Let's try to see if we can get a good deal here. So there are some price cuts for sure. I wouldn't say they're hurting a lot because they're still actively looking buyers. But I think for the next 6 months, there's some good opportunities.
Are you also seeing a similar decrease in cost for renovation, let's say material, labor, because of the increase in interest rate? Because at the end of the day, increase in interest rate is supposed to have a ripple effect on the entire economy, not
Yeah.
just the real estate
Yeah.
rate. So is there any correlation you're seeing there?
I think it's still inflated.
Still
Yeah,
inflated.
still inflated,
Yeah.
definitely.
Yeah,
So we
yeah.
need more interest rate hikes.
Yeah, it's still inflated.
Yeah, it's definitely inflated
Yeah, I
for
haven't
sure.
seen-
Related to the inflation, the main objective of the Bank of Canada is to raise the rate to lower the inflation
That's
rate.
right.
Yeah.
That's right.
But we see there is no proportionate decline in
Yeah.
the inflation rate
Yeah.
compared to the increase in rate of
I
interest.
know.
So does not that mean that the Bank of Canada will be more aggressive in containing the inflation rate or lowering it down?
So yes and no, right? Because you also have to think, yes, I think one is definitely, increasing the interest rate. But the other thing is COVID, the times were so unprecedented, right? Like we have so much supply chain issues that are happening right now. Like, where factories in China like all shut down, right? And then plus the war between Ukraine and Russia. So yes, absolutely, like the housing market was definitely, one that where, we had prices that were so high and stuff like that. But also there's other things that factor into the inflation as well. So you're probably right where yes, they will take aggressive measures. But at the end of the day, we also have to realize that it's hurting the economy, right? Like people are probably going to foreclose on their house, right? There's a lot of people that they may be in the stat is probably really high where in the last 2 years, people have probably opted for a variable rate mortgage instead of fixed rate mortgage. So people are going to start seeing that, those pain points happening, right? So I'm hoping that the trend is that, we don't get to that foreclosure rate, where people are, giving up their homes and there's flash sales happening, right? And so hopefully they will understand this and they will realize, because I think the housing industry is one of our biggest part of our economy, right? So to your point, hopefully, they will stop at some point where it's not hurting us as much as it is now.
Anyway, the commodity prices are coming down. Look at the number, look at the oil and other related commodity
Yeah,
prices are
yeah.
coming down.
So hopefully that happens,
Yeah.
I
right?
have one more question. You just mentioned that the amortization period
Yes.
has to be raised
Yeah,
from 35 to 50 years.
yeah,
So my question is, in the history,
yeah.
ever 40 years
Yeah,
amortization
absolutely. Yeah,
period?
there used to be back in the
Yeah.
day. There used to be 40 years,
So
and
there
then
is
exactly there's
to go
absolutely
higher.
yeah. And back in the day, there wasn't even the stress test portion, right? There was the housing crisis in 2008, and that's when people are like, people were signing loans like no tomorrow, and then the crowd, the house, and that's when they decided to, implement
What
and.
was the highest amortization period?
I'm going to say 40 years, depending on the lender. Sometimes you can even go up to like 45, 50 years, because on the alternative side, just not like your TDs and your Scotias, but like the B side of banking, they can increase your amortization and your qualifications, right? The only negative or is the fact that you're paying more in terms of your payments. So there's always an option to own a house. It's just how much are you willing to pay to own, to get that house, basically.
Are there any options for people who, like you mentioned, because of the interest rate increases, if they're not in that specific type of mortgage and the mortgage amount keeps increasing, it's gone up to $750, which is a pretty big cash crunch for any family, right?
Absolutely.
So are there any options for them to, let's say, even go for an interest-only mortgage as well, but be able to decrease their monthly payments?
So then you could look at either like then switching into like a static variable payment, right? But here's the thing though, right now you're getting the peak of the interest rates, right? So let's say if you do decide to do like a fixed rate or a static variable, you're not getting, an interest rate of like 2%. You're paying at the peak when you're refinancing, into that, new term that you're going into, right? And banks are also hesitant right now too, right? Because they're sitting on the sidelines too. Like back in the day, I think, all alternative lenders, 65% LTV was okay, right? Now they're asking people to put in, they're only like giving out money up to 80% of the value of your house, right? So they're also sitting on the sidelines and they're also thinking, how much risk can we tolerate as well, right? So once again, I think speaking, to an expert and actually seeing the numbers in front of you and running the numbers, I have a client, they're in a true variable mortgage, right? And I was like, you know what? Would a static variable mortgage maybe be better for them? Because that way, there's a next hike that's going to happen and who knows what's going to happen after. Could it actually really be helpful for me to switch them. And when you do the math, they're still paying lower than what they would be paying if I switched them into a static variable mortgage right now, because they're getting that peak interest rate right now. So that's why it just, a lot of times, we think that, hey, you hear in the news, you're like fixed rate, and that's what I should do. But when you actually run the numbers and you realize, you actually come to see that you're still better off in your position than if you were doing this.
Is there generally a rate difference when you ask for a static versus the normal true variable?
No, not really. It's the same generally.
Then you do have to just do the numbers and see which one.
Correct. Some banks, some lenders are just better at, they're a little more flexible. Like Scotiabank, for instance, they don't have a static variable mortgage. And sometimes their interest rates are a little bit higher compared to the other banks. And the reason for that is they're a very flexible bank. So if you have investment properties, for instance, they sometimes help you qualify for a little more just because that's their realm of clients that they have. So they're a little more flexible. So that product might work for you. But then if you're a first-time home buyer, someone like TD, RBC, or BMO might be better because you probably want, the benefits of the static variable that, if you do decide to not finish your 5-term, right? So it really depends on the person, their situation, and then we can kind of go from there.
Would you recommend to a client for a fixed rate, which probably could be, I think, 4 point, like high fours, right?
5s.
5, right?
Yeah.
Low 5s, I think.
Yeah, look, yeah.
Would you recommend a 5-year term or a 3-year term?
So once again, we don't know what the outlook is going to be like. Right now, I do have people coming and asking, what the 5-year. But then what happens, when you're at the 3-year mark, right? And the interest rate is not what you thought it was going to be, right? Once again, it's that risk factor, that, gamble that you're willing to have to take. At the end of the day, I think it depends on you as a person and how much you can, take on.
A 3-year term and be eligible for a variable at that time.
Exactly. Yeah.
I had a question regarding affordability. So, we've seen prices come down, let's say 20%. So if it was $1 million, it's $800,000 now. That mortgage payment, how much of that has changed? Is it almost the same, or?
It is almost the same because
right?
the interest rates have gone up. But here's one way to look at it. You're paying for your house at the current time, right? That house value is going to increase, right? So it might be 800 now, and you're right, it was $1 million before, right? But think about it, not what the, don't look at the micro level, but look at the macro level where you're just paying those monthly payments and it's going towards principal or interest, and that property is going to appreciate.
I guess before you guys head out, we'll still be here for a few minutes if you guys want to come and talk to us. I'll be handing out a book that's over there to each one of you guys. It's called Real Estate Intelligence, and it just breaks down how to buy, sell, invest in real estate, and this is the one. And there's a really good illustration in here as well, talking to you guys about, for example, what your payments would be on a monthly basis if you're buying a home. What are some things to look for in an investment, location, all that stuff, all that good stuff. So if you're first time or thinking of buying, or even if you need a refresher, this is a really basic fundamental book. So don't forget to get your copy before you head out, and I'll get that to you guys. Thank you so much, Fatma. Really, really appreciate it. We do have a recording, thanks to Fayaz Mauji from Savanna Productions. So what I'll do is after the program, maybe Monday or Tuesday, I'll get that link out to you guys. You guys can recap. Do share it with your family and friends or colleagues who might be interested. Just want to give a shout out to a few guys in the room who also have their own businesses that maybe you can benefit from various levels. We have Asif Raza, who is a financial advisor with Edward Jones. So if any of you guys are looking for investments, aside from real estate as well, I promote other stuff as well, not just real estate. So feel free to talk to him for investments as well. A lot of the good stuff out there. He can help you guys out. Nabil Naqvi, trusted lawyer, real estate lawyer who can help you with your future closings. We've done many deals together. We're also friends from way back. So he can help you with that. Who else? We've got Hussein Abbas, who is an accountant. So any accounting, I think you do mostly corporate business, yeah. But if you guys have any questions, he's also on social media, so check out his reels and TikTok videos. They're very good. Fayaz Mauji, we have, he's always done our recordings and my videos as well. He does events weddings, birthdays, real estate, video. So if you're shooting your home, he's the guy that will come for videos. And I like to promote businesses as well because we want to promote each other. I'm not sure if I'm missing out anybody. Anybody has a business? If they don't, if they do, let me know. But I think I covered everybody.
So here's the TD, I think, but more on the commercials.
Okay, yeah.
Commercial lending side.
Commercial lending. Okay, there you go.
Big money.
Big money. Yeah. Oh, sorry. I forget. Awesome. Construction. Yeah. Why don't you say something? My apologies. Yeah, construction. So any renovations, painting, whatever you need, contact Asim and his crew, and they can help you out with that. And any advice you need from our end on the real estate side, even if you're not thinking of buying, not thinking of selling, we're always available to speak to you guys for any advice, mortgage, real estate related. We want to walk you guys through the process, and I really promote real estate investments to a lot of the young guys that I know because it's been a great avenue for building wealth for myself personally, for a lot of my colleagues and clients. And I know a lot of us are fearful to take that first step, right? And that's very understandable. But once you do that first property, it almost becomes addictive because you see the wealth that you can build in it, and not just for yourself, but for others as well, so for your children. One thing that has really hit me is that in the next 15, 20 years, what are my kids going to do if they're going to be in the GTA? How are they going to afford a home, right? So start thinking about that. Start thinking about what you can do. You can always buy or purchase a pre-construction, let it grow passively in value. Not even real estate. You can go to Asif and get an investment from him. You can do a bunch of things. So it's not just real estate, but start thinking about your children, because when the time comes for them to buy a home in the future, if you've saved money with Asif in a trust fund or something, they can have something to look forward to in the next 15 years, which will help them get ahead. You can do the same thing in real estate as well. So start thinking about those things. Think 20, 30 years down the road. It's going to be a game changer for a lot of you guys.
I just want to add one more point,
Yeah.
add some value to the conversation.
Yeah.
My biggest advice to anybody is just work with professionals that you trust and know.
Correct.
In the last 8 years, we would have maybe 1 or 2 deals a year that didn't close.
Yeah.
Now we're seeing 1 or 2 per month, deals not closing.
Wow.
Wow.
And the ones that aren't closing are the ones, people who are working with realtors that they had no conversation with, no relationship.
No due
with.
diligence.
These realtors left these people to target.
Wow.
Like, I can't help you, you can't close, deal with your lawyer.
Yeah.
So I know yourself, you would never do that. So it doesn't have to work with Essen, but work with someone that you know is not going to leave you in the dark if you can't get to where you're trying to get.
Right. 100%, guys. Work with a professional. You have the services here. You can go it alone. Read this book. You could probably do it alone if you can, but I'm telling you that a lot of people still need a professional. So hire a professional. Work with a professional. It makes a world of a difference, right? And I'm telling you guys, it can be the deciding factor between closing and not closing on a home, which can have serious ramifications in the future as well. So thanks for that point. I think I'm done. So thanks so much again for coming out. We'll send you the recording, and we're going to be here for a few minutes, and then feel free to ask any questions. We got coffee and donuts as well. So yeah, just whatever. Feel free to just walk around and hang out. Okay?
Thank
Cool.
you.
Thank you, guys.